Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is January 10th, 2023, and I'm going to go over your three threes for the week. I'm going to go over our top 10 major asset classes, their performance, and our three favorite, and how we are positioned on the short term for both equity and bonds, and our top three market movers for the week. So let's jump on in.
Okay, let's go over the major asset classes performance on a week, year-to-date basis, and also on a one-year basis. The U.S. equity market surged on Friday following the latest non-farm payrolls report, which showed that wage growth was slowing in December. That gave the Federal Reserve efforts to tame inflation an all clear. It is actually working, and the market reacted on Friday and liked that. So for the week, we had a lot of green, a lot of positives. US dollar was up 0.37. The bonds were up over 2. Equities were up over 1%. The big winner was international markets, up over 4 and 5. Now, commodities, which was pulled down by oil, which was down 7% for the week. A lot of that had to do with COVID-19 cases in China, again, spiking. So they reopened, then they're closing, or now they're reopening. Well, they've done that 4 or 5 times now, but that definitely affected the market and the commodity market in particular. On a one-year basis, we have the US dollar up 8%. Gold actually now on a one-year basis is up, and commodities on a one-year basis is still up. Everything else is still in the red. All right, let's go over the top 3 asset classes on a long-term basis for January 10th, 2023. We have no change this week. We still have T-bills, gold, and dividend equities as our top 3, and the primary driver of this market is still defense. Now, here's a great chart. A lot of people have asked, how do you come up with these top 3? Well, we pulled the 15 major asset classes and we went through them in our proprietary ranking system based on relative strength, and we ranked them 1 through 15, and here they are. Now that we've ranked them, we got to make sure that they are bullish, not only on a trade, which is a short-term indicator, but also on a trend, which is a little bit longer-term basis. If they both are bullish, that's a good indication that we want to own them. And if they're ranked high, we will own them. And these top 3 we do own in our portfolios. Now, the bottom 2 down here, commodities and NASDAQ equities, both bearish and also ranked really bad. We do not own them. Now, I did not disclose what we have here. I can't give it all away, right? That's proprietary to our clients. But as you can see, here's a good mix of them for at least the top 15 major asset classes. Now, we monitor and invest on a daily basis in 80 sub-asset classes. So this is just a picture of 15, but we actually do it for 80 to give a little bit more diversification for our clients. All right, let's go over the bonds on a short-term basis. For 2022, the year-to-date performance, as a reminder, was down 12.8. For the first week of 23, the bonds are up 2.2. So far, so good on the bonds. We started to nibble and add here back in the middle of November. So far, so good on the bonds. All right, let's go over the equities on a short-term basis. As a reminder, again, for 2022, equities, the S&P 500 was down 19.4, but for the first week of 23, the S&P 500 was up 1.5. So that's a positive. However, if you remember right, we went to protect mode on December 15th, right? So we're kind of a little bit bearish on the equities, at least for right now. We shall see if it can get back up into this zone and break through. We might go back to adding equities, specifically the S&P 500, into the portfolio. But as you can see down here, when we were in the protect mode, we really did a great job last year of protecting our clients' asset. And when we started to add, they were very, very small gains, if any, right? That's proper risk management in a portfolio. All right, let's go over the top 3 market movers for this week. On Wednesday, we have the FTX bankruptcy hearing, and that's starting on Wednesday. And that's basically the cryptocurrency exchange that was founded by the former CEO, Sam Bankman-Fried, who eventually ended up resigning. And you know most of the story, it's been on the news a lot, but that's the start of that trial. So that may have a major move for the cryptocurrencies and the market in general on Wednesday. On Thursday, the number two market mover, probably one of the biggest, will be the CPI for December. The BLS will release the CPI for December. Right now, the projections are for CPI to have risen only 0.1. Which is exactly what it did last month. But on an annual basis, year over year, the price growth is anticipated to have decelerated to 6.5. This would be down from 7.1, which would be a large, really nice move for the CPI. I'm not sure if it's going to get to 6.5. I may think that it's going to be a little bit higher, but the market will move on that if it does come in at 6.5. On Friday, it's earnings season. Corporate earnings season starts, and it's the financial sector. A lot of the big banks and institutions are reporting: JP Morgan Chase, Bank of America, Wells Fargo, Citigroup, and BlackRock. So we'll get a really good first look and see how the banks are doing heading into the remainder of the earnings for this month. All right, that's it for this week. Thank you for joining us. Our next update is Monday, January 16th. As always, continue to subscribe, like, and comment, and we shall see you next week. Have a great week trading.